Thank you so much, sir, for being here and helping us in the project. So, our first question is, what attracts you the most in a startup, like in a generic way?
Yeah. So generally, the term is like startup. Usually, we feel that whoever started their business journey or entrepreneurial journey. Now, if we look at any entrepreneur, individual entrepreneurship is great. Like when you look at somebody who started his journey or her journey alone and then probably created a company, it can be private limited, it can be a proprietorship, doesn't matter. And he or she is doing great, right? But when it comes to the investment, like a third party, as an angel investor or probably as a VC fund, somebody is looking for investing in a company, then the first criteria is the great team. So until unless you have an amazing team, even though you have a great idea or maybe your execution levels are amazing, it's really difficult from the investor's perspective to invest in a particular company until unless they have minimum two to more than one, at least two to three co-founders who are completely dedicated to their own startup. Now, the question is why? Why we first take a look at the team? Until unless we understand there are more than one person, it may happen individual company is doing good, but when you put money, the individual person, the proprietor, can fall sick. So the decision making power for him would become a little bit of difficult. Number one. Number two, usually the common perspective is one person cannot have all those kind of mindset in the sense or skill set, I would say. For an example, one person may not be great in marketing and sales along with the finance and technology. So if the team consists, I usually prefer a CEO and a CTO coming from completely two different dimensions. The CTO must be from technology. He don't care about all these things happening in management, understand a little bit of business, but more inclined to technology. And the CEO is a kind of person who can take decision on behalf of the business rather than personal agenda. There is a big difference. I would love to share that with you. The founder and CEO are two different perspectives. Usually when you start your business, in your business card, some people, or even when I started, I wrote founder and CEO. Now, when I founded my company, my love for the company is much more higher than defining it from the CEO's perspective. Example, as a founder, probably I took 4 or 5 employees in my organization, and then somebody is not doing good. But out of love, as a founder, it may not be possible for me to ask him to leave. But as a CEO, he is more of a ruthless person who understands he needs to take care of the company first, then emotions. So if you are founder and if you can do that as a CEO's role, that's great. So coming back to your question, what comes first? What we look at: A, the team; B, the rest of the procedures, like is your company investable? Is it that you are willing to dilute your equity? Is it that you are holding probably 2 to 3 minimum % of the market that you are mentioning? For an example, if you have say a million user base, can you cater at least 2 to 3% of that particular market if you are doing it? And what is your existing traction? And what is your background track record? And how committed you are to grow the company? These are very basic things. Beyond that, I mean, as an angel investor, probably I would not think beyond that. But if you look up from VC perspective, those structures are completely different. There goes your valuation, there goes your other dynamics, there goes your pre-money valuation, post-money valuation, a lot of different factors, including KRs.
The next question is related to the same only, sir. So, how do you value a company? Like, how can we value a company looking at is just a startup of 1 or 2 years, and how we decide that it is a valuable company or it is the future?
Super. A lot of things. For an example, as a fund manager or as an investor, usually if you are a seasoned investor, you need to understand the market dynamics, right? the decision usually comes from the experience. What exactly going to happen in next market? What is future? You need to understand it from the various different perspective, not from a country perspective. If it's a strategic investment, you need to understand this is basically for the investors. It is you need to understand what is going to happen in your continent. Forget about the globe. Let's freeze it from country and continent, right? Say if it is India and we are talking about health and nutrition, and somebody is saying that, you know what, I'm gonna do a disruption because I'm gonna bring a couple of things which is probably processed organic food. There is a huge market. There is a big market, right? Now, probably that startup have got, say, 100 paid customers, right? And he or she is doing probably very good work in, say, in Madurai, right? Which is not a metro city, but he has got a hardcore desire to grow that company. Now, as an investor, if the group of investor feel that is their forte and they have a network which can grow the startup from that particular place to various different regions, and they understand, okay, fine, there's a huge community of vegan people, there's a huge community of health freak people who are more from corporates, students, usual daily life, homemakers, and they are looking for such kind of solution instead of protein supplements, which is a little bit of costlier. And of course, there is a lot of fake products that is there in the market. But this startup is saying, I'm pure organic. I'm not gonna make anything bad for your health. Rather, I'll be creating maybe a protein bar with lots of oats along with dark chocolate, few bit of nutrition values with raisin, with dry fruits, and that calorie consumption power is this, and then X amount of dilution will happen. And after that, probably 80% dilution will happen in your body without any side effect. That gives a comfort zone to an investor. Okay, fine. This is the place where I should put my brain to make it more sizable. Now, when you ask me that question, how valuation works, he has got or she has got probably the 100 paid consumer. That means they have a market. And it may happen there is a competition. If there is a competition, that means the market is already there, right? So your entry barrier, your entry cost becomes low because there is a competition.
Okay.
And sometimes because you have a competition, your competitor will actually put your name into their competition analysis slide deck. So eventually you will get a free marketing, right? So then there is another very sweet factor. That sweet factor is like for that particular startup, he or she is willing to grow his company, and somehow his mindset works that, you know what, I'm not willing to grow in only India. I want to expand into some other country, but my target countries are probably the Middle East or maybe few parts of Asia. It can be Thailand, doesn't matter. From the calculation perspective of an investor, there is a great market and there is a big gap into nutritious food or organic food out of India, right? From that perspective, if the calculation goes, okay, fine, they have got a team and they have got a strength to cater all these kind of orders. What they lack, they need a market connect. What they lack, they need a big team. What they lack, they need a marketing budget. If these criteria match, angel investment bound to happen. And that's how you can actually evaluate the company depending on the market potential and the future prospect. Now there is another aspect.
Yes, please.
There is another aspect. Forget about that startup on the organic food. I was talking about more on future, and there is a market. It may happen that in deep tech technology, it is very hard to pitch and make investors understand that this deep tech is the future. Example, somebody created a machine learning algorithm, and that algorithm probably can detect a human body, and within maybe a couple of clicks, within 2 minutes, it can detect the entire body and simulate it, make a 3D object inside your computer. That's it. That's the solution, right? And when you start pitching from investors' perspective, okay, that's fine. I mean, you have created some, Star Wars kind of solution, but what's the future? Until unless that startup makes the investors understand who is your target consumer and where exactly you can sell your such kind of product, it's going to be real difficult. This kind of valuation is really tough to make. Why? This technology can be used in space. This technology can be used in automotive. This technology can be used in media entertainment zone. There is an enormous number of applications in this vertical. But until and unless they have proved it somewhere as a MVP, and they would have shown where they want to go and what are the kind of companies they want to touch upon, it's going to be real difficult for valuating that company, right? Sometimes these kind of startups, they feel that if they compare it with the MNCs, the large, big guys, investor will say yes. To be very honest, let's be a little bit of realistic. Let's explain within your zone, within your target radius, how much you can do and where you can stuck, where you can probably crack a deal and where you feel that you need a guidance and mentoring. If you have such kind of criteria in place, understanding the future part would be much more easier, and you don't really need to understand the valuation game, rather than it happens more on a gut feelings. I'm not sure how many of you have heard about gut feelings of angel investors. This is what it calls as a gut feelings. Oh my God, there is a market, nobody touched upon it. These guys have done something which is really cool, not there in the market, but we have a network of angel investors, or maybe in my network, I can talk directly to a MNC who can probably white level these guys, take it to a complete skyrocket level segment. And if I invest, my money will be multiplied like 20 times or 30 times, nobody can say. So that's how you can do, you can say, a smart investment rather than only going for valuation. I'm so sorry, I'm being a little bit of different from others. I don't bother about the valuation game, or rather I bother about the 10x return about the investors.
Yeah.
So sorry about that.
So I got to know that like how tough, like for the person who was pitching for the investment, this is same reality for the investor also, that they have to think like what is going to be, I mean, I'm putting my money, is like, is my money going to be a 10x in 1 or 2 years or not? Like they have to capture a market in within that 15 to 20 minutes.
So much is always not like that. It's not always like you are willing to multiply your money. Multiply money is fine, but you know, there are seasoned investors. I know a hell lot of them personally. They don't bother about multiplying money only. Sometimes they bother about what is the impact that's happening, right?
Okay.
An example, these kind of deep tech technology. Okay, I'll give you a live example from our accelerator. We invested around very simple, small amount of 250K USD into a Turkish game development startup, right? And the reason we did that, because we really liked the team, number one. Number two, we saw the future. We never ever thought about what is their valuation. They couldn't pitch to us properly. Trust me on this. Okay, their English was different. They can't communicate in English properly, but we understood that where we can add value, where we can grow this company from whatever level they are to a certain level, and what kind of impact that these guys are talking about. In that cases, probably it's not about always only money. It's sometimes is like the kind of impact that you are willing to make in the world. That's also
got it.
Yeah.
Thank you.
So whenever
This was
the
very
invest,
interesting.
so when the investor decide to invest in a startup, so how do you calculate the cost of equity?
Frankly speaking, there is no calculation point. It completely depends on the negotiation that you are doing. As a strategic investment person, if you ask me if I'm smart, I will not take more than 25% of the equity in the first level into any startup, whatever money I'm investing. I'll tell you the reason why. If I'm taking more and more equity, the founder is not feeling very kind of happy. Maybe he needs a lot of money.
Absolutely.
He says that, okay, fine, I'm willing to give my 40%, but in his mind, he is sink. You know, he cannot flourish. He cannot work the way he should have worked if he is enjoying more equity in his own kitty. Number one. Number two, from the strategic perspective, the second layer of investor, when they come on board, if I took say 40% or 45% of that particular company, it's a little bit of dicey situation, So it's like a marriage that happened, and then after that, you are willing to get someone on board, maybe another senior guy with many more money, and he is not feeling cozy that, okay, fine, the founder don't have much equity. It's not Series A that's happening. It's the second line of investment that's going on, right? Now, these are tricky subject, guys, So if you ask me such kind of common question is really difficult. I'm just giving you common perspective. Say,
Got it, sir.
say it's a seed investment that he took from us, and I took a lot of equity. So there is a non-coziness from the second layer of investors. But if it's probably Series A happening, and then the founder already diluted a lot more equity, and his valuation is real high, and his market size is real big, and the next line of investor, they are feeling that, okay, fine, I can get probably a small amount of percentage, but that percentage money valuation is really great, they will come. So we are more talking about startup perspective, where probably it's the seed stage, and in initial level, my suggestion is to not to dilute a lot of equity from investors and from the founders, both the perspectives. It becomes a little bit of uncoziness. I'll tell you another real life example. Sorry if I'm giving you live examples, okay?
No,
In another country, I'm not taking the country's name, somebody was pitching me, I really loved that business, and then I found that the first investor invested approximately 3 crores into that company, and they took 80% equity of that company.
Oh.
So I said, no, I'm not going to enter. My perspective was pretty simple. If that founder already diluted 80% of that company to maybe a third person with that small amount of money, what is going to happen if I enter and after that I want an exit? So I need to pull in many more investors into the pool, right? And there, the founder don't have any say, to be very honest. It's already the decision maker is that investor. So it's a little bit of, you can say, pushy if you need more equity initially. Even I had a lot of tussle with few bit of investors who will only invest money with if they get only 50% equity of the company. So it's nice, it's good, but somehow there is a big gap when you're investing in the idea stage startup or maybe the execution stage startup and taking 50% equity from someone. So it's not about, frankly, again, I'm repeating my words, it's not about the valuation game. It's always about the return of money and the kind of impact and the number of people that you are giving as a recruitment service into your organization and the kind of life that you are touching. So what happens if you get many equity, you are diluting many, of your company shares, and in the end of the day, you are not making profit. So the people who are probably working in your organization, they have uncoziness, probably finding some other job. And then after that, there is a big news that this is a unicorn, but it's not doing well. That's not how the real investment world sometimes works. Good for media news, but the real world is a little bit of different.
Got it, sir.
Absolutely, sir. So, sir, in the current scenario, considering the trends of last 3-4 years, how profitable you believe that it would be to invest in a real estate startup?
Okay, so if you talk about real estate startup, what it is it like they are making real estate projects, or they are making a platform for other real estate players to come, or they have a groundbreaking solution for real estate guys?
Sir, as of now, you can consider that they are taking a turnkey projects for real estate renovations.
Okay, so if you talk about real estate, to be very honest, see, there are different kind of investors, to be very honest. People who invest money in real estate, more of Indians, they prefer investing in the growing countries, the first world countries, as a strategic investment, right? So that they can multiply their money. I'll give you a ground reality, what happens from the perspective of maybe someone who is earning a decent amount of money, maybe as a suggestion or what is going on. So they usually try to buy a property which is in Europe or maybe in Middle East countries. They don't want to stay there. What's going to happen? That real estate company will build the entire project with these individual investors' money, right? Once it is built, they will put it as a rent. So as a real estate investor, they will earn money sitting at home because they invested the money into the real estate company to build a certain project. Okay, say X project, say X hotel. Okay, I'll give you a real life example how a hotel can be done. Okay, place like Dubai. Okay, in front of Marina Bay, you selected a place, and then as a property builder, you say that this is our property. I'm going to build a hotel over here, and I'm looking for individual investors. As an individual investor, you give money and you own a room of that hotel. Now, it is the duty of the real estate builder to give it to a very lucrative and big name who can actually run the show as a hotelier. So real estate builder is giving it to a hotel, say X hotel, good name, 5-star or 7-star, property is built because it is done very nicely. The entire management of that particular hotel says that, okay, fine, we're going to take it. And the way it is going to happen, that particular room will be rented, managed by the hotel management. Whatever money they are going to earn, there is a fixed rate that's going to be enjoyed by the individual investors. Say they have got 100 rooms. Within 100 rooms, maybe they have got 90 individual investors. They own 90 of those rooms. Every month they get a payment. They enjoy that payment as a sleeping investor. Please understand, this is not at all angel investment. This is not at all venture capital investment. This is more of an individual person's money so that they can multiply it, right? From hotelier's perspective, they are not investing much. They are just investing their management skill set. And the existing people, maybe the chef, maybe the room boys and other people, right? They are also earning good amount of money. Now, from the perspective of real estate developer, in this case, the entire thing is actually diversified. I mean, I'm talking about the income to the real estate developer, the hotel management, and the individual investor, right? In this COVID time, this is the right kind of time for these individual investors to invest money and own a hotel room or any other place. It can be a villa, it can be other things, but the calculation will be different in each and every case. I'm just giving you hotel rooms perspective, right? It is smart movement. It is happening, to be very honest. It's happening in many Asian countries, mainly people from US, Europe, Russia. They are investing heavily so that they can own it for next 99 years as a lease and they can enjoy the money, right? Now, if you talk about, is it the right time to enter into the market, which is into real estate? Frankly speaking, I will go to Hindi. Roti, kapra and makan is always a good factor to invest in. If you have a smart mindset, the market will never ever go down. It always goes up. From the normal person's perspective, it may seem that, you know what, real estate, abhi nahi karte, yaar thoda ruk jate hain. Matlab, it's like the COVID time is happening, nobody is going to stay. No. From the opposite perspective of investment, if you are investing early, your entry barrier again becomes low. And if you can hold it for maybe 2 to 3 years, your income level goes leaps and bounds, because when there is no one, you are there in the market already. You already procured that. And that's what's happening worldwide, to be very, very honest. So if you ask me the question, answer is yes, this is one of the right time where you can probably enter into the real estate investment business. In fact, we created a platform called Property Planeta. It's a complete new venture wherein I invested in. It's an aggregation platform, including lot many tech solution and banking support for the real estate players to enlist their properties, and for the individual investors and for the bulk amount of investor who would love to invest in villas and properties and lands. they can enter and they can multiply their money. This is not my marketing platform, so I'll skip that part. But to be very honest, yes, this is one of the best time where you can enter. Does that answer your question?
Yes, sir, absolutely.
Yes.
Okay.
Anukriti?
Yes, sir. So far we're just talking about finances and financial aids. So bringing something different, I would like to know that apart from financial aids, what kind of other support like interests you? Would you like to mentor a company or any other that kind of support that you like to give?
Okay, so let me differ a little bit. Like investment and mentoring are two different aspects. Investment, mentoring, and business coaching, three are completely different verticals. Lot many times, Akriti and Manoj and Shomesh, lot many times in LinkedIn or in Facebook or in my Instagram, a lot of startup usually send me a text. I am looking for a mentor and an angel investor. Jokes apart, I keep saying no. I'll tell you the reason why. If you're looking for Guru Drone, Drone is not going to give you money. He's going to guide you how to become Arjun, or probably how to become Ekalav, right? Mentor's job is not to invest his or her own money until unless they feel so. An angel investor, it completely depends on the investor, whether they want to mentor that guy or they want to become a sleeping investor, or they want to give somebody else who can actually better understand them, guide them, right? I'll tell you real life cases. Hope that will help a lot of us.
Yes, yes, sir.
I'm a coal mine owner. I have a lot of money. I want to multiply that, right? And probably I have invested in a tech company. I don't understand anything on tech, right? My strength is into coal mines, real industry implementation, and do massive amount of business. Now, from that fellow, if you're looking for guidance on probably artificial intelligence, will that be good? No. So you need a person who can probably understand technology part of it and business part of it and do the best matchmaking. You know, the best mentor is someone who is learning from you and you are learning from him or her, right? That's what I prefer. When I'm doing mentoring for free, I repeat, when I'm doing mentoring for free, I need something to be done on a both perspective. Example, I should be able to learn from you something. It can be a very small, tiny thing. It can be like how to drink. I don't care. Okay. But it should be from both perspectives. I'll tell you why. I really don't want to become a professor in a college when I'm doing mentoring, at least in Indian perspective, with due respect to all the professors. Okay. I really don't want to talk about your syllabus and your theory. If I am giving you a perspective, you should be able to ask me 10 different type of question. Otherwise, it's not mentoring. If you're nodding your head and say that, yes, sir, it's not mentoring. It's taking a class. Okay. A proper mentoring is somewhere you would be able to ask me as much as questions that you want to ask. It may happen I don't have all the answer, but I know someone who have got that answer. Or maybe I know some books where you can probably get that answer. That's what I call as 75 to 70% mentoring. Rest 20 to 25% is giving you the market connect. If I'm mentoring you out of love, out of passion, and probably I expectation that probably when I die, you will say that this crazy fellow was our mentor and we're happy that he was our mentor over a drink. I don't care. Or maybe gali dete hue bol sakte ho. Doesn't matter. But that factor is required for any mentor to come and give proper guidance and handhold them, give them the market connect, probably connect them with the right kind of investor who can maybe invest in your company, right? It must come from heart to heart. Now, let me come back to investment. Investment, it happens on multiplying your money from the investor's perspective. Plus, if he or she feels This is their own company. They will give you a lot more guidance. It may not be mentoring. That's called guidance. That's called
Yeah.
suggestion.
Right.
That's called business growth. That's not mentoring.
Free
Right?
advice.
Okay.
Yeah.
So let's define mentoring, business guidance, and business guidance plus investment. If you get business guidance plus investment, amazing. If you get only a mentor, he is asking for a little bit of equity and say that, okay, I'm going to bring your company to one level to another level. You cross check them, you verify him and take a risk. That's one of the best solutions that somebody can get, to be very honest. I mentor in a hell lot of places like IIDF in Russia, in Seed Stars, Techstars, name any, IIM Calcutta, I don't care, you know. But when I mentor, when somebody says from incubation center that, okay, fine, you mentor these guys, this has been chosen from our, investment pool or probably from our incubation center's calculation point, please guide them. I usually say yes, with the perspective that both of us will probably become one of the best friends that nobody can ever thought of. And that usually happens. Trust me on this. Okay. I would love to take the example of Juan, who is a Portuguese guy. He is my mentee from Seed Stars. He calls me in a very odd time in a video call when he is enjoying with his family. Wanted to show me that he is enjoying with his family because I asked him, this is not the life that you are living. You are becoming more and more corporate. Enjoy your life. You are showing me that he is enjoying, making sure that. Okay, that's the kind of openness that I usually have with my mentees. I can go on with my other US based mentees as well, including a couple of Europeans. I would love to give another example. Probably Gorana. Gorana is basically from Serbia. Okay, so she usually give me text and saying that this is what happened in my family. This is what is going on in my friendship level. This is where I'm stuck. And can we have a discussion? It's not at all related to business. It's more of about discussion about life, about their own personal issues. Now, you may say, Akriti and others, that, I mean, you are a crazy guy. You're saying that this is mentoring. No, this is not mentoring. I say this is mentoring. I'll tell you why. If you don't understand that person, and if you don't understand his personal life, how do you feel that he or she will grow? They cannot grow. You need to give them a comfort zone that you are with them. Crazy nights, 3 o'clock in the Indian time, I get a call from my USA mentee. I can tell his name, Neil. Okay, he's a crazy technology guy. Okay, he created a hovercraft drone, and he gives me a ping saying that I'm stuck here. 3 o'clock at night. We started talking with each other, right? And he's not stuck in business. He's stuck in somewhere which is completely different from business. He became morose. That's what I feel I would love to call as mentoring. I don't know whether who will call what.
Completely agree, sir. So moving towards the next question. So what and how much return any investor expect from that making in an investment? What kind of returns that they expect?
Okay, I will retweak your question a little bit. Hope that will help all of you.
Yeah, yes.
If it is from VC's perspective, they of course need to make more money. In a venture capital fund, there are other people who invested money. They want their return. It has to be ruthless unless they make a lot of money, right? So there is no percentage. Usually, if it is more than 10x, amazing. From the angel perspective, if I'm an individual angel investor, not investing as a group of angels, okay, we call it as an angel syndicate, then our expectation as an individual angel, sky is the limit, as much as you can, right? Now that sky is the limit, you need to understand, it's not about money. It's about money and a little bit of name fame, a little bit of network and connection. Sometimes it's a very small amount, which is a seed capital. Sometimes even founders don't even understand how much they should ask. Real example. In my last Northeast series of mentoring, I found two ladies, they are looking for only 17 lakhs, 17 lakhs as a ask money.
Okay.
How much they are earning? They are already earning 10 lakhs in a year. And they are willing to give more than 40% of their company because they don't have wildest clue how valuation works. And frankly, they don't need 17 lakhs, to be very honest. The money is there in their company. They really don't know how to multiply their money, right? If I am taking a advantage perspective, probably I'll say, okay, here it goes, 17 lakhs. I'm going to take 40% of your equity. What am I going to do with that? It's the point. Rather, if I'm a smart investor, I would make them understand how this valuation game works. Invest a small amount of money plus network, grow them along with them. Probably I will grow as well, right? Make a mark, take an exit. Correct. Now, coming back to the angel syndicate. Angel syndicate usually happens like we are all investing small amount of money and then we are growing that company. That's one of the best. Trust me on this. Okay. That's one of the best where 4 or 5 brains, they are committing X amount of money. And these 4 or 5 brains are actually accelerating a particular startup from whatever level they are to a complete different level, which they could have never thought of, right? It's a kind of, you can say, ultimate situation where they get guidance, they get investment, and they are growing. And from the investment perspective of these angel syndicate groups, they are not only multiplying their money, they have more options to probably stay back in the company, enjoy the equity for next, say, 7-8 years, and then take an exit or stay back and enjoy more profit. Answer your question?
Yes, sir. Yes, sir.
So, sir, from the perspective of angel investor, if given an opportunity, how willingly would you like to invest in a real estate project?
Sorry?
Sir, in the current being as an angel investor, if given an opportunity, a platform and a company have present you an idea, how willingly will you be interested to invest in a real estate project?
Well, I already did. I already told you. So, of course,
Okay.
it's an interesting one and would love to explore more if given a choice. I'm a small person in vast world. So if I can get more choices, I'll be more than happy to explore more.
Okay. And sir, the last question is, what would be your advice for the budding entrepreneurs who are in their very nascent stage?
Yeah, a lot of advice. I mean, don't take my advice. It's your own life. It's your own journey. You should explore your own journey on your own way. The only thing is like, you know what? Lot of people can give you a lot of input, how to start company, how to sustain it. Listen to everyone. I mean, understand in your own way. There is a saying that when you start your journey, it's like learning how to swim. Okay. Now to understand how to do business, how to run your startup successfully, sustain and grow, make profit, be happy, you need to start swimming, man. Probably initially as a baby stage, you need someone to guide you how to learn swimming. Option A, you get an instructor. Option B, you get a tire through which you are learning it on your own. If you get a tire, you will have more flexibility. You are not dependent on a human being. You learn it on your own and you grow. If you have an instructor, that's great. But please understand, after certain times, you don't need the instructor. You need to swim on your own. So if it is your journey, do your journey. But in certain stages, I agree, you need proper advisors, not consultants. You need advisors to grow your company who can actually give time, their network, and probably give their knowledge of failing. That's important. Okay. And if you have that, don't lose that opportunity. Get those guys on board. It can be anyone. Like it can be, I mean, sorry for this language. It can be a chai wala. It doesn't matter. Okay. It can be someone who probably failed 2 to 3 times in their own business, and then probably they are looking for a better option in their life. If you get such kind of person into your startup, they're going to stay probably with you for next couple of years. So take that advantage and try to get a small understanding in your mind how to multiply money. Guys, it's not about how technical geek you are. Trust me on this. When I started, I was 17. I used to be a technology geek. I used to code like hell, like anything. I used to stay awake 4 o'clock in the morning while doing coding. And then I realized it's not about coding. It's all about your product and selling factor of your product, how you can pitch yourself, how you can make manage your money, how you can create the entire team, how you can become more futuristic, how you can make leaders into your company. Sorry for this line of mine. Sometimes I felt that in startup world, because you are a startup, it's a lot more glorious. Some people are lost in their journey and they feel that we are doing amazing. We have raised a couple of $1 million. So, we are in the news. We are like more popular. Well, agreed. But do you have the next line of your leaders? If you are not there, you're chilling in maybe in Malaysia or maybe in Maldives, your entire team is running the entire show. And do you have more third layer, which is created by the second layer into your company? If that's happening, that's one of the ultimate case and optimized case that anyone can ever think of. And that should be the optimum level of company. Forget about your media news. If you're doing good, you really don't need media news. Media will come to you eventually. So wait for that.
Absolutely, sir.
Are we
Thank you so
good?
much, sir.
Are we done with questions?
I think yes, we are done.
Yes.
Is anything
Yes, sir.
left?
Yes, sir. We are done with questions. No. Thank you so
Thank
much,
you
sir,
so
for your
much, sir.
time.
Pleasure. Anything you guys need, just ping me and we can definitely hop in for another round of call. Thank you.
Yes, sir.
Sure,
Yes,
sir.
sir.
Definitely, sir.
Thank you
Thank
so
you.
much.
Bye.
Have a great day, sir.
Cheers.
Bye-bye.
Bye.